Hey, welcome back. It's Nolan Mathias from Mortgage 360, and today is the day. It is time for the March real estate market update, where we're going to go across the country, look at the biggest markets in Canada, and see exactly what is going on in the real estate market. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget about our race to 10,000 subscribers, where one lucky winner is going to win their monthly rent or mortgage payment for a month just for subscribing to this channel. All you have to do is click the subscribe button. It's free and it's definitely easy. And by the way, I am so thankful and grateful for all of you who have joined us. Our subscriber count is going up at a rate of 1,400 people per month, which is absolutely incredible. We've got one of the fastest growing YouTube channels in the real estate and mortgage market in Canada. So thank you all for your support. And with that, let's run the intro. The definitive guide on how to manage your credit: product, penalty, price, in that order. It's never been more important to get your mortgage right. Okay, so let's get into it. Let's discuss the real estate market in Canada and what's happening in different markets. And one thing I can tell you across the board is that housing values in every single market that we're going to talk about today have gone up compared to January, and obviously compared to February 2020, which is what we're comparing the data to in this case. So all of the major real estate boards have released their data. That's the data that we're going off of. And let's start by discussing Saskatoon. So let's open you up, let you guys see my screen. And we're going to start with some of the smaller markets this time around and move to the bigger markets, so that the people who are in the bigger markets basically have to wait and stay till the end of the video, which thank you very much for doing that. But let's get into it and let's discuss Saskatoon and what is happening there. So Saskatoon this month, and Saskatoon being the biggest market in Saskatchewan, they are up on their benchmark price by 10.1% over February of 2020. And their HPI benchmark is now sitting at $330,000, which is about $5,000 more than it was last month. Active listings, again, are down pretty substantially, down 50%. Now their new listings are up, but the active listings in every single market across Canada are, for the most part, very much down compared to what they were last year. Now, the reason why the active listings are down is really simple. It is because more of them are getting sold faster, so they come on the market and they are off the market quicker, which means there's less active listings. And obviously, sales are up pretty much across the country. Saskatoon is no different, with their sales being up 53%. Now, moving a little bit east of there, going into Winnipeg, average detached price in Winnipeg is up by 21%. This is a little bit more than it was last month. Sales are up by 48%. Active listings, again, down by 41%. And their average detached price, so detached being a home that isn't attached to another home, so it's not a townhouse, not a condo, is now sitting at $378,234. Now, again, average price is different from median price, which is different from benchmark price. If you want to see all about that, go back and look at the February update where we talk about that quite a bit. But just note that this is the average price, and this can be skewed by a lot of really high-end sales or a lot of really low-end sales. So keep that in mind when you're looking at average price data. Now, moving on to Calgary, which uses a benchmark price data, which means they look at a specific type of home in a specific type of community year over year to see what similar properties are selling for. Their benchmark price is up 3.8%, with sales being up 54.3%. Now, think about that. This is an oil economy that's been depressed since 2014, and we're seeing an increase in prices and a lot of sales activity, which is really interesting considering the economy that Calgary and Alberta is in. Now, if you look at the benchmark price is now at $431,100. Now, moving on to Montreal, I found this one to be really, really interesting. So the median price is up by 28%, but the sales are actually down by 3% compared to February of last year. So I'm not sure what's happening here. I actually had to stop filming this, go back and double check to make sure I had the data right. But this is the only big market in Canada that actually has sales decreasing. So I'm really interested to see what's happening in Montreal. Obviously, they are having an increase in prices. We've seen deals be done in Montreal where there's competing offers and housing prices are increasing. The word that we're getting on the ground there is that it's absolutely crazy, but the number of sales is actually going down. And you know, even though sales are going down, the active listings are down pretty substantially, which will still help prices go up, which they have. As you can see, the median price has come up to $460,000. But really interesting dynamic in that Montreal market, seeing the sales fall off compared to what they were last year. We'd pretty much expect across Canada right now that you would have more sales this year than you would in the previous year. So maybe there was something that happened in Montreal last year that had big sales as a result in February, and this has just come back to a normalization. I'm not really sure there. We'll look more into that and maybe get you an update next month and see what's happening. But aside from there being that slight difference in sales being down in Montreal, everything else is pretty much the same with respect to consistency in housing prices going up. Now, moving on to Toronto, which huge news in Toronto. This month is the first time that they have had the benchmark price exceed $1 million. So housing prices are now over $1 million. Vancouver is no longer the only city that is over $1 million. This is huge. Benchmark price is up by 14.9%. Sales are up by 52.5%. Active listings are down by 1%, so their active listings aren't down a ton, but those sales are up a huge amount. And we're seeing a lot of competing offers in Toronto and Ontario. I'm now licensed there, so we're doing deals on a daily basis in that city. And it is absolute insanity, especially with houses now breaching over $1 million. Now, moving on to our last city and what we consider to be the most valuable city when it comes to real estate in Canada. Vancouver's benchmark price is up another 6.8% compared to February of 2020. Sales are up, get this one's crazy. Sales are up 73.3%. So contrast that with Montreal, where they're down 3%, and in Vancouver, the opposite side of the country, sales are up by more than 70% over what's happening in Montreal. And here's what I think is happening there is I think we're seeing a return of flippers and investors to the market. Low interest rates combined with positivity are basically bringing that investor mentality back into the British Columbia real estate market. Their active listings are down by 10%, which you would expect considering that you have that many sales happening. And the HPI benchmark, again, the largest in Canada, is now at 1,084,000 and continuing to rise and showing no signs of stopping in the next few months. So this is absolutely incredible. Vancouver's market is absolutely insane and super hot, as is Toronto's. Calgary's is getting better and better all the time, and the smaller markets are obviously doing well as well. So here's the thing. Here's the question that people are asking me right now is, what do I think they should do if they're thinking about getting into real estate? Because one, they're worried about being priced out of the market. Two, they're worried about buying and then having housing prices crash. And the answer to both of those questions with respect to what should you do if you think either of those things are going to happen is, if you're going to be in the market for the long term, so let's say the next decade, because you're going to need a place to live, it probably doesn't matter whether you buy now at the top or whether you buy later at the bottom, or you buy now at the bottom or later at the top, whichever it is. What matters is that you are in the market, and if you're buying long term, you get to own the piece of property you have. You get to realize the principal reduction. You get to realize the benefits of home ownership, and 10 years down the road, there's a very, very, very small chance that you're going to be worse off than you are right now. Especially even if property values just stay the same, you're going to have all that time of paying down principal and adding to your net worth. So if you are buying for the purpose of living in a house, it still makes sense to buy. It probably, if you need to get in the market in the next 3 to 6 months, probably makes sense to buy now rather than later, just so you aren't buying at even higher and higher and higher values. And at the end of the day, if you are a real estate investor and you are looking to flip or buy houses for a profit, there's probably a different conversation to be had. But for the most part, if you're somebody who is in need of a home, don't be afraid to go out there and buy it, as long as you know that you're in the market for the long term, and that means 10, 15, 20 years. Don't be afraid of rising housing values. Just know that when you get into the market, you are doing so with the expectation that you're going to live in that house for a long time and realize all the benefits of home ownership. So if you found this video useful, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you see this video. And don't forget about our race to 10,000 subscribers. Yes, one lucky winner is going to win their mortgage payment for a month as soon as we hit 10,000 subscribers. It looks like we're going to get there pretty quick, so I'm thinking end of May, early June, we're going to be giving away a monthly mortgage payment, and I hope that you are the winner. Go ahead, hit that subscribe button, and we'll see you on the next video. Cheers.